Welcome to episode 478 of AI Brief. I'm Amin.
And I'm Leah.
Today we have a really wild deep dive for you, starting with a massive sustainable sneaker brand that is literally tearing up its factory floors to pivot to AI compute.
Yeah, plus we are unpacking Gemini landing directly on the Mac with a native app, and, well, Snap cutting 1,000 jobs fueled by internal AI automation.
Right, and we will cover the rest of today's major AI shifts and then run through the top trending tools to boost your own productivity. Let's just jump right into these new updates because the market reactions are completely dramatic right now.
They really are, especially on the hardware side. I mean, think about Allbirds, the company famous for those really comfortable wool sneakers that just took over Silicon Valley a few years ago.
Oh yeah, they were everywhere. I mean, you couldn't walk into a tech hub without seeing them. They were a massive darling, hitting what, a $4 billion valuation at their IPO peak?
Exactly, $4 billion.
Right.
But fast forward to March of this year, and they sold off their brand assets for a mere $39 million. Yeah, they were essentially hollowed out. But here is the massive pivot. They just closed a $50 million financing deal to become a completely new entity called Newbird AI.
Okay, wait, so
They are converting a gutted footwear company into a GPU rental business.
let's actually pause on this because the market reaction was absolute whiplash. The stock, trading under the ticker BRD, shot up over 600% in a single day.
It's wild.
It went from $3 to over $20, just completely lifting a market cap that was sitting at a tiny $22 million out of the basement. And get this, next month, shareholders are actually voting to strip the company of its public benefit status.
Which was tied to their whole sustainable footwear mission.
Exactly, it's completely gone.
Well, the mechanics of this pivot are, purely financial, but they reveal a much deeper truth about the current economy. That $50 million in financing is earmarked specifically for one thing: purchasing GPUs.
Right, the high-end chips.
Yeah, the chips required to train and run AI models. They are setting up a GPU as a service model.
So they're basically becoming a landlord. But instead of renting out apartments, they are renting out computer brains.
Precisely. They buy the hardware, rack it up in their old industrial spaces, and then lock AI developers into long-term contracts. The reason this works is that a massive warehouse previously used for shoes already has the heavy industrial footprint.
Wait, the zoning.
The zoning, and critically, the access to the massive commercial power grid required to run thousands of servers. It really just illustrates the absolute desperation in the market for compute access. Capital is eager to fund physical infrastructure, even if the vehicle is, well, a former shoe company.
You know what this actually reminds me of? Okay, hear me out. Remember 2017?
The crypto boom.
Yes.
Yeah.
We had that wild era where dying companies were suddenly adding the word blockchain to their names just to revive their stock tickers.
Right, I remember that.
You literally had iced tea companies pivoting to crypto to juice their valuation. This feels exactly like that, but I guess the massive global compute crunch provides the perfect physical cover.
It is the 2026 version of that, yes, but with a highly tangible asset at the center.
But, CEOs constantly throw around this cliche that every company will eventually become an AI company. I really have to push back on that narrative here.
How so?
Well, gutting a shoe factory to rack servers is a literal interpretation of that cliche, not a figurative one. They aren't using AI to optimize their supply chain or design a better running shoe. They're just abandoning the original business entirely.
And the market incentives overwhelmingly reward that wholesale pivot. But what is equally fascinating is that the market is also rewarding brutal software efficiencies on the operational side.
Which brings us to Snap.
Right. Snap is currently cutting 1,000 jobs, which is about 16% of its entire staff. And CEO Evan Spiegel has been very transparent that this reduction is driven specifically by AI efficiency.
The scale of this is wild. They're targeting $500 million in annual savings by the end of 2026.
And the internal mechanics of how they are doing this are staggering. They are actively swapping out traditional engineering teams for small AI-augmented pods.
Which perfectly explains this next statistic. AI is now writing 65% of new code at Snap.
Yes, and handling over 1 million monthly queries internally.
So I have to pose a question to you, listening to this right now. When an organization sees human code writing drop by 65%, are we just looking at a temporary phase of financial trimming? Or is this a permanent structural shift in how software is built?
It really is a permanent structural shift. The economic mechanism at play here is the decoupling of revenue growth from headcount.
Right, the old scaling model is breaking.
Exactly. For the entire history of the tech industry, to scale your output and grow your revenue, you had to scale your personnel. AI breaks that fundamental law. It allows companies to scale output while actively shrinking the workforce.
And the financial markets responded exactly as expected. Snap's stock rose between 7 and 9% on this news. This mirrors the action we saw from Block back in February when they cut 4,000 jobs. Over 70,000 tech jobs have been erased across the industry this year.
Which highlights a widening disconnect between Wall Street and the tech workforce. Wall Street cheers for these efficiency metrics. They look at a company doing the exact same amount of work with 16% fewer people, and they see pure margin expansion.
But the workforce fears it.
Completely. The workforce fears the rapid devaluation of traditional coding skills. The market is exclusively focused on the bottom line.
So Snap is completely overhauling their back-end operations with AI. But at the same time, Google is battling to dominate the front end, the actual daily workflows. Google just launched a native Mac desktop app for Gemini.
This is a major deployment.
It really is. You trigger it via the Option plus Space keyboard shortcut. It gives you deep integration, like screen sharing capabilities, so the AI can see what you were working on, plus access to your local drive and photos.
And they integrated Nano Banana for image generation.
Yeah, and Veo for video generation right into the native app. They also rolled out a Windows app, though that one is currently English only and bundled with Google Lens.
Launching a native app with a dedicated hardwired keyboard shortcut is a brilliant strategic move.
It is like owning real estate.
Exactly. We should note, though, Gemini is arriving almost a year late to the native desktop space. Rival models established their Mac applications months ago.
Not only are they late, but Gemini still feels very chat-first.
Right. It trails behind the others in agentic abilities.
Let's actually clarify what agentic means for a second. A chat interface requires you to prompt it step by step. An agentic system, or an AI agent, has the capacity to autonomously execute multi-step tasks directly on your machine.
Like finding a report and emailing it automatically.
Exactly. Gemini isn't quite there yet. But securing that keyboard shortcut, it relies entirely on muscle memory. If you want to search for a file on a Mac right now, your fingers automatically hit Command plus Space.
So Google wants Option plus Space to become the exact same automatic reflex.
Yes, for any complex thought or task. The browser is a destination, but the operating system shortcut intercepts your intent before you even open Chrome.
That is the crucial advantage. Google's distribution network is completely unmatched. They can close the capability gap through sheer omnipresence.
Let's take a breath here. We need to step back.
Okay.
We have talked about bizarre shoe company pivots. We have talked about Snap's internal overhauls.
And Google fighting for your keyboard.
Right. But if we pull back, if we look at the actual tectonic plates shifting underneath all of these daily updates, the rules of gravity in this industry are fundamentally changing.
They are. We are seeing massive macro movements in how these models are valued and how they think.
And crucially, how they charge you money.
The scale of the capital involved is difficult to comprehend. Anthropic is currently drawing investor offers at an $800 billion valuation.
Which would more than double their current $380 billion valuation.
Exactly. It puts them right on the heels of OpenAI's $852 billion post-money valuation. And Anthropic is not even actively looking to raise capital right now.
The market is just throwing unprecedented amounts of money at the foundational model layer.
But alongside that valuation explosion, we are seeing a very expensive shift in monetization strategy. Anthropic is fundamentally changing their Claude Enterprise pricing structure.
Yeah, they're moving away from flat fees.
Right. They are charging businesses strictly based on token consumption. We really need to break down what token consumption means because it changes the entire economic reality for heavy enterprise users.
Like a utility meter on your house. Right?
Yes. Think of a token as a basic unit of data. When you ask an AI to analyze a massive 500-page document, it has to process millions of these tokens. A flat-rate monthly subscription provides cost predictability.
You pay your $50, use it as much as you want.
But token-based pricing ties your financial cost directly to your computational cost. Power users who run massive data analysis loops are going to see their bills scale dramatically.
Which actually leads perfectly into one of the trending tools we are tracking today that attempts to solve this exact pricing headache. There is a tool gaining traction called Nado AI.
Yes. Instead of managing multiple expensive subscriptions, Nado AI acts as a centralized subscription hub. It gives you access to over 16 premium foundational models, all under a single predictable subscription interface.
A very smart arbitrage play.
It really is. But the reason these models can charge so much is because their capabilities are expanding just as rapidly as their valuations.
And this is where things get genuinely profound. The new model, GPT 5.4 Pro, just successfully produced a mathematical proof for a 60-year-old math problem.
This cannot be overstated. The mathematician Jared Lichtman reviewed the proof and observed that the AI found a mathematical path that human mathematicians had completely overlooked.
We often view AI as just an incredible aggregator of human knowledge, like highly advanced autocomplete.
But solving an unsolved math problem by finding a completely novel path demonstrates something entirely different. It demonstrates alien logic.
Wow, alien logic.
It is synthesizing foundational rules to discover original solutions outside the bounds of human intuition.
And we are seeing identical leaps into complex agentic capabilities across the creative space too. Adobe is pushing heavily into agentic creativity with the debut of the Firefly AI assistant.
This system runs multi-app workflows. It operates across Photoshop, Premiere Pro, Lightroom, and Firefly simultaneously.
So instead of you having to edit a photo in Lightroom, export it, open it in Photoshop, add text.
Exactly. The user issues a single high-level command. The agent then coordinates and executes that multi-step sequence across all those disparate software environments on its own.
We are seeing the same agentic shift in the business sector. HockeyStack just raised $50 million for an AI revenue agent.
The mechanism here is brilliant. It reverse engineers a company's successfully won sales deals. It analyzes timestamps, semantic phrasing in Zoom calls, and mathematically maps out the sequence of human behaviors that led to a signed check.
And it uses that data to create a blueprint for future lead prospecting. The transition from simple chat interfaces to autonomous agents is undeniably the defining shift of this cycle.
The pace is absolutely relentless.
So let's translate these massive abstract industry shifts into practical applications you can actually experiment with today. What are the trending AI tools we're tracking?
Well, beyond Nado AI, if you are doing any kind of audio work, Google just released the Gemini 3.1 Flash text-to-speech model. It operates natively in over 70 languages and features highly specific audio tags.
So you can actively steer the emotional tone and regional accent.
Exactly. It is already sitting at number 2 on the global leaderboard.
For spatial computing, NVIDIA released a tool called Lyra 2.0. It turns standard text descriptions and 2D camera paths into fully explorable three-dimensional scenes.
And if you need 3D assets for those scenes, there is a tool called Dixie Studio that instantly transforms a plain text prompt into a high-fidelity 3D model.
That is incredibly useful. And if you're focused on pure 2D image generation, Baidu just launched Ernie Image. That's a powerful open-weight text-to-image model.
Which means the underlying architecture is available for developers to download and heavily modify.
It's not locked away behind a corporate firewall.
Right. And in the professional services sector, a tool called After Session is gaining significant traction. It allows professionals to turn their own brief, spoken post-meeting summaries into highly structured clinical notes.
So it completely bypasses the need to record the actual raw session with the client.
Which presents massive privacy hurdles anyway. You just dictate your messy thoughts after the client leaves, and the AI structures it.
And lastly, for general media creation, a platform called Hamidia is making it incredibly fast to generate high-quality AI video and image assets for marketing workflows.
The sheer accessibility of these tools completely changes the baseline for individual output. You have access to the exact same foundational intelligence that is currently upending multi-billion-dollar corporations.
Which brings us back to where we started.
It does. Think about the scope of what we have unpacked today. If a legacy shoe company can transform into a GPU rental service overnight, and an AI model can generate alien logic to outthink human mathematicians.
It begs a much larger macroeconomic question.
Exactly. What fundamental, untouchable assumptions about your own industry are about to be completely rewritten?
That is the exact question you need to be asking yourself this week. Please follow the podcast and share this with someone who needs to stay ahead of the curve.
See you in the next episode.